Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the US dollar index came under heavy selling pressure and lost around 1% following the minutes of the US Federal Reserve's early November policy meeting, which showed that most policymakers agreed it would be appropriate to slow the pace of interest rate hikes, which could see a smaller rate increase at their coming meeting in December. The minutes released on Wednesday from the Federal Reserve showed that the majority of policymakers now feel that the inflation is actually starting to ease somewhat. However, still a little bit uncertain in terms of how high rates will go. Still, the market is now expecting a 50 basis point rate hike, then a 75, which now sees the central bank's benchmark rate currently standing around 3.75 to 4%. Looking ahead, trading volume is most likely to be thin ahead of a short week. That is, the market will be closed in the US in observance for Thanksgiving. Looking at the Australian dollar, we can see that the market has headed further away from that 60-day moving average and closer to its objective of 68 cents. I still feel there is much gain to be made from the Australian dollar due to the weaker dollar index plummeting back from 107.10 down to 106 figure. In light of the pattern, I feel we are looking now to the challenge of 67.70.80, and a break there could give further scope up towards 68.45 and reassess from this region. Looks like the euro is very much on track now to take the challenge back to the 105 area. After the last 2.5 consecutive days, the market is relatively firm. Indicators have been reinstated to support the bullish case, and the dollar losing ground could see the gains reached at 105, with any pullback now expecting to see the market respect the region that comes in around the support level, which I shall highlight is around 103.45. Having taken the challenge through that 140.65 level for dollar yen, the market has reversed and crushed and now looking further to the downside of 136.40.80 area. I do feel that the market is still relatively bearish. In fact, after the RSI reinstated the bearish case, and the MACD is also buckled, that we could see further weakness, with any gains likely to find a cap now around the region as previously seen around 140.30.60. All cheers for sterling as it reaches at the level of 120 and now looks like it can actually stretch to 122. I like the way this pattern still looks relatively firm and therefore any pullback likely to be shallow. The challenge was staged to the downside overnight for gold, but it hit a round of demand from the key level of 1,726 and from there has posted an engulfing candle. We did have an inverted hammer that gave some indecisiveness, and then from the rejection has put the market back in focus at 1,754 to 56. A break above there will give further scope up towards 1,778 to 80. But do keep in mind that any pullback can still reach the bottom side of this range around 1,726. Having staged a weak dragonfly doji, the market has found itself into a bit of difficulty overnight for oil and plummets over 3% and now back towards its recent challenge of around 74.80.95. In light of the pattern though, the market is somewhat negative again, with the ADX posting a bullish trend and the market is still holding to a negative bias when it comes to the RSI and MACD. Reassess from the bottom side of the range as we did see good demand around that 74.80.95 and may do so again. Well, that wraps it for the morning. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the day.